Welcome back to Good Day Orlando. Time now is 9:23. So your taxes aren't due for several months, but there are a few things you should do before the end of the year to save on taxes next year. Joining us now is Bert, the Oracle of Orlando. Good morning, Joe. Good to see you.
Good morning, Andrea. You too.
All right, so you've got some great advice when it comes to getting sort of ahead of the tax filing. And when it comes to itemizing your deductions, there could be some different rules ahead.
Yeah, what they're talking about is the new tax law is they're going to give us an automatic increase in our itemized deductions. They're going to double it. So right now, if you're single, you're going to get $63,250, so $6,325. If you're married, filing a joint return, $12,700. Wow. That's this year. Next year, it's going to be double. So if you itemize your deductions, you want to look at maybe taking some of the things you would normally do for next year and try to put them into this year when you can use them. Like if you haven't paid your property taxes yet, you want to do that now. Even though you may have already paid them earlier this year, you can double up on that. Your charitable contributions, let's say you give so much every year to your church, your synagogue, whatever it might be, maybe give it this year so you can get that benefit. So you can use that itemized deductions because it might be lost. One other item that we want to tell our viewers, because we had a Hurricane Irma, the government's given us a little slack. Normally you can't take a deduction for losses, property casualty losses, unless they exceed 10% of what's called your adjusted gross income. This year they're waiving that 10%. So, and it could be part of your itemized deductions. You can add it in there to really bunch them in this year, and because you may not be able to use them next year because we get that automatic doubling if in fact the tax law passes.
Right, exactly.
That's the big if.
The big if, the big question. When it comes to other miscellaneous itemized deductions, any recommendations?
Yeah, these are the things that, like the stuff that you use for business expenses at home, you know, your computer,
home office,
unreimbursed travel expenses, those kinds of things, home office. Yeah, that's always important, and you want to be able to use those as well.
Okay, what about our retirement funds?
Well, retirement is important, and what you want to look at is are you maxing out your 401k? As you always say, you have until you file your taxes on April 15th of next year to take your IRA deduction. Even though you may not put it in this year, you put it in next year, you'll still be able to get a tax deduction for it for 2016.
And I know a lot of people get a bit confused about this. If you've already got a 401k, you can also have an IRA as well.
Well, that's correct, but the question is whether or not you can take a tax deduction for it. So there's three kinds of IRAs. One that's deductible, one that's not deductible, and of course the Roth. And it all depends on what your income is. The best thing is if you can get a tax deduction, but first of all, you want to start by maxing out your 401k, and then if you still have money left, then maybe you could take a tax deduction for a deductible IRA, non-deductible IRA, no deduction but a Roth. That's not deductible either, but once again, it's a way to save money for the future, which is important.
Okay, Joe, always good to see you. Where can people find you?
Just Google me, 2 words, Joe Bert, B-E-R-T.
Okay, a lot of things to get ready for and prepared for.
It's here before you know it.
And especially with the big if, too.
That's correct. Stay tuned.
Yes, stay tuned. No kidding. That is so true. Well, stay tuned to Good Day Orlando. Coming up.